Please remember that nothing we say here should be taken as personal advice. The conversation is for entertainment purposes only. If you have questions about your financial situation, please talk to a licensed financial advisor. All right, welcome to another episode of Future Money, where we talk about the investments of the future
that will make us money.
Nice. Happy 2024. The
Happy New Year,
Happy New
yeah.
Year. You're allowed to say it, I think, until the end of January, and then you're not allowed to say it anymore.
No, it's great. It's a great start to the year.
Yeah. It's exciting. We did last time we did this, we did a recap of the previous year.
Yeah.
Things we got right.
Yeah.
A few things we didn't. But hey.
Always the case.
Always the case, exactly.
Yeah. No, we had a fantastic year. I think, I hope everyone had a fantastic year. Gerber, Kawasaki in general, we ended the year on a high note, probably the highest AUM that we've had, the most employees we've had.
Yeah.
It was very positive year all around.
Yeah,
I was very
great.
happy.
Totally, that we know there's some other issues, but there always are.
Correct.
But we always
correct.
got to stay positive.
Yeah.
And it's been great, and look forward to a great 2024. So figured we'd start this show this year, the 2024 Future Money, with some things to talk about, some things to look for this year, right? We got I think the big one that everyone is already thinking about is
elections, right?
Elections.
I think, listen, our show's purpose is to cut through the noise, right? And I think every conversation I've had this year so far was what's going to happen if Trump and Biden run.
I think you mean when.
When, right?
Yeah.
I was traveling over the holidays. I was traveling internationally, and I was in Australia, and not every person, but almost everyone I talked to, I said I'm from the States. They asked me that question.
Yeah.
So
it is crazy, because I was abroad also earlier in the year, and same question: what's going on?
So no doubt, huge impact on world politics. What happens in the United States? That's how big the U.S. is, and that's how important the U.S. is.
Yeah, for sure. Well, how important is it? Which one wins, I think, is the bigger case. And so we're gonna put morals and politics aside here. We know politics is a lightning rod issue.
Yeah.
And we're not saying one way or the other. I think what we're trying to talk about here is what happens during election years.
Right.
What happens depending on who gets elected.
Well, the conventional wisdom is Republicans are better for the stock market.
Yeah, that's what people think, because Republicans have been kind of linked to this idea of fiscal conservatism, of being good for business, etc. But the Democrats also like to spend a lot of money, so that's also good for businesses.
Yeah, absolutely. So pro-business versus, more kind of a social spending. Yeah, spend, right. And the reality, and there is a chart that we're going to show on the podcast if you're watching this live or on YouTube. Yeah. Actually, it doesn't matter.
It doesn't matter.
It really doesn't matter who the president is,
right?
For how and this is how beautiful our country is from a system standpoint, right? Mm-hmm. It really, what matters is what are you in the cycle, what kind of market you're in. Are we easing? So interest rates are important. Are we easing or raising interest rates, right? So going back to 1936, basically, we had how many presidents? We had 1, 2, 3, almost 15 presidents.
Yeah.
Right. And basically it's half. The Democrats average 11% for any 10-year annualized return, and the Republicans 10.5%.
Whoa. Well, what about that 0.5%? That's just the margin of error. Incidentally, by the way,
for
the long-term average of this U.S. stock market, depending on what period you're looking at, is 10 to 11%.
100%.
So basically, it doesn't matter.
It really doesn't matter.
Now, obviously, every election cycle has its own different challenges. So you can nitpick and say, well, if this happens during a Republican year, right? Like the financial crisis happened during, right when sort of George Bush was coming out of office, George Bush Jr., And then
we had the financial crisis.
And then we had the financial crisis, and then Obama gets elected,
Right.
and basically comes in at the bottom of the market.
We had an amazing 10 years, right?
Right, and then Trump comes in, and the market rallies.
And by the way, no, it's not just because of Obama, because rates went to zero, pretty much.
Yeah, I mean, right. That's a recovery. It's
Right.
rate going to zero. There's a million reasons. So, just because we say it doesn't quote matter doesn't mean that in any given election cycle something really good or really bad
Right.
can't happen.
Yeah, and I think the other thing is like the most recent story is when Trump got elected. I remember this. Everyone's freaking out. The minute he got elected, the futures I think were down 3% or
5%. I remember vividly, like it's one of those flashbulb memories that happened.
Correct.
Down 5%.
In one day, right? That's a massive move for one day.
Yeah. And not a COVID related, that's a big move for a political thing. That's how lightning rod was.
Yeah.
And we ended the day up. I can't remember if it was 2 or 3%.
Correct.
When the market was
So
done.
once everything kind of settled in, and actually the first year of Trump being in office was not a bad year.
No, it was a very good year in the market.
It was a very good year. And then COVID happens and we got crushed, right? So I think it's really important to kind of tune that noise out, right? And it's going to be a lot of very ugly rhetoric from both sides. It's going to be very contentious, very divisive, unfortunately.
Yeah. And you may hate the outcome, whichever side you're on. You're probably going to hate the outcome.
Correct.
But it's important to note that regardless of what happens, if either one of them gets elected, they can't get elected again.
Right. 100%. And listen, there is some sectors that may benefit, and not to completely disregard who is in office.
Correct.
There is some sectors that may benefit when one or other is winning, right?
Yeah.
But we don't know that yet.
Yeah.
So it's tough to make that bet 12 months before it really happens. So it's just really important if you're thinking about your allocation, your investments, to really think through that and understand what we're really trying to figure out here, and we're not betting, but rather trying to make some concerted investment decisions. Right?
Exactly. So we move on from that. Right, elections, they're gonna happen. I think in a minute, we'll show you. Actually, maybe it's good to show the chart right now. Yeah, so this is the one. Yeah, that chart right there. So U.S. stocks in a presidential election year, right? You basically a lot of times, you kind of have a slower first half of the year as people are digesting what's going on. Then, interestingly, leading up to the election, where there's more uncertainty, generally the market doesn't like uncertainty, but interestingly,
if you're not seeing the chart, basically it shows the first quarter. On average, this is going back 100 years. On average, the first quarter, 1%, 1.3%, second quarter, 1.5%, third quarter, 6.2%, and fourth quarter, 3.3%.
Yeah.
Right?
So if you have a slow start to the year, don't worry about it. Again, these are averages as always, right? So real life's going to look a little different. Yeah. But it's interesting to me that third quarter is...
It makes sense, right? Like there is a lot of more uncertainty leading up to the election.
I mean, I don't know. In these elections, there seems to be a ton of uncertainty, every time, and even post-election last time there was uncertainty. So, but I think it's interesting to note that, just kind of want to share that.
And what's also known and it's true is that a lot of volatility during election years doesn't mean it's going to be negative. It's just a lot more movements on the up and down side. So, so those are things that we'll be watching for and hopefully taking advantage of this year.
Yeah.
So that's number one. Number two, cash. Right? Let's talk about cash. We're all earning 5% in our cash accounts. How awesome is that?
Very exciting. Very exciting. And a lot of people don't want to invest because they think, there's a record 8.8 trillion. The Wall Street Journal said today that we're still at 8.8 trillion in cash between money markets and CDs and things like that.
Yeah. Take us back a little bit down memory lane. For the last 15 years, we didn't earn anything.
We earned zero.
Yeah. In our
there was like 6 months where we earned a couple percent in 2018, I remember.
And then Jay Powell and the Fed raised the rate 5% in 18 months.
Yeah, 5.5%.
5.5%. Yeah. So now your money market, if you're working with someone good, you're getting at least 5%.
Yeah.
Right? Treasuries, we've been buying treasuries for the last 6 to 9 months, getting us 5.5%. We almost got to 5.6, 5.7%, right?
Yeah, at one point, yeah.
But all that cash is not going to earn as much because
the Fed has basically said they're done,
right?
And they're going to lower rates, and I think that just depends on whether that's 1, 2, 3 this year, but most likely rates are going to come down significantly over the next.
So unless you lock that in for 2 or 3 years, which was tough to do, you cannot really do that.
Yeah.
If you have a money market account, as rates go down, the yield on that money market account is also going to go down, right? And also, you can think getting 5% is great until you look at the S&P, it was up 23%.
Yeah.
24%.
24%.
Right? So the opportunity cost of you staying in cash is massive.
Yeah.
Right.
Again, and normally speaking, when rates start to fall, bonds do really well. So your longer term bonds, the stuff that's longer, will do much better over the coming years, historically speaking.
Yeah, and that's without making recommendation. That's a trade that GK has been doing over the last few months, which is move out of some of the treasuries that giving you 4 or 5% and move into longer dated bonds, and not just government bonds, but corporate bonds and different kind of bonds. Would that get you 6 or 7%, but also on the longer duration? Yeah. So you at least when rates come down, you also have appreciation there
Again,
too.
Historically speaking, when rates come down, bonds do very well. So there's room to make money both in stocks and in bonds.
Right.
And generally speaking, when cash is at these levels, when rates are at these levels and about to be cut, that's not a great place to be in, generally speaking.
100%.
So stocks and bonds are really going to kind of be, even a balanced portfolio, as we tell people, now is very attractive when you can earn 5% on your bonds.
Remember, 2022 was the worst year for a balanced portfolio
in history.
Right?
And the worst year for bonds, and by far, not even close.
So now you're starting to get some yield on your bond allocation, which is your fixed income allocation.
Yeah.
Which means that your safer part of the portfolio is starting to generate 5-6%, which ultimately it's a great thing for your overall allocation.
Yep. So we want to invest in that.
So we want to get ahead of it, right? You want to make sure, and that's the conversation we're having with our clients right now is how do we figure out where to go with our safer allocation, basically.
Yeah. We talk about this all the time, and we'll get a little more into this. We want to invest in great companies, great sectors, innovation, right? But we can't just invest in innovation, right? We can't just be like, oh, let's buy the most high risk.
I can't just own NVIDIA.
I mean, you can. It's not a great strategy. I mean, it would have been a great strategy over the last year. But no, it's important to own diversified portfolio, obviously, because anything can happen to one company.
I mean, we say this all the time, and I'll maybe push against this, but 90% of your return is based on your allocation.
I love to see stats that nobody really has an answer for what they actually mean, but but no, it is asset allocation is super important, not just to like.
I heard a great story about asset allocation where Bill Gates became good friends with Warren Buffett, and Warren Buffett told him you should diversify out of Microsoft stock. Yeah. So he started selling Microsoft stock and bought a bunch of shit.
Thanks, Warren.
And now had he held onto his Microsoft stock, he'd be worth $1 trillion, 1.1 trillion.
That's pretty good. That's pretty good. I'm gonna go out on a limb and say it's okay that he didn't do that.
150 is okay.
Yeah, I think being where he is fine.
No, we say this. You get rich through concentration. You stay rich through diversification. Yeah. So it's really important that you stay diversified, and that's what we do here is we look at different sectors, different areas of the market, and we like to buy individual stocks and so forth. But ultimately, I think last year's was about tech, right? The Max 7, Magnificent 7, blah blah blah.
60% of the return of the market.
60%, seven stocks.
Seven stocks. Yeah.
The average hedge fund last year did 4%. 4%.
They sure hedged. I'm not sure what, because I think bonds did 4%, and I think stocks did 25%.
You had to try.
And so I'm not really sure what you're hedging there.
Yeah. Ray Dalio, who everyone thinks is super smart, their main funds at Bridgewater did minus 16% last year.
How is that even possible? Like, what did they must have been short the market.
No, commodities. They probably shorted some of the Max 7 because they thought it were over expensive.
Yeah.
Probably invested in China.
That's tough, man.
That's
bad.
That's bad.
Anyway, we're not going to fall Ray Dalio. He has a very large fund and obviously has been doing it for a very long time. And again, I think it goes to the point, which is, the last kind of point in all this is there's always going to be reasons to be scared of investing.
Sure.
Interest rates, geopolitics, elections, wars, inflation. But the point is that if you stick with it, the problem with why most people don't make money investing is they don't know what to buy and they don't know how to stay invested.
Right. Listen, worst case scenario, buy the S&P, man. Buy the index fund.
And even so, right, but we know this stat, and this is a stat with real data behind it, not like 90%. This is the study done by Vanguard over the course of many years that said, and Vanguard, who is, by the way, the champion of do-it-yourself investing, and it said that the average investor who bought the S&P or whatever with a financial advisor did 9% a year.
Right.
The average one who did it on their own did 4 to 5% a year.
Yep.
Right.
That's the cost of timing, basically.
Cost of timing, emotions. What do I do here? Should I sell here? Should I buy here?
Yeah.
That's the problem. So, right. So if you just kind of work with an advisor, a lot of the things that we do, regardless of investment management, this is future money. We're going to talk about innovation and investing and all that kind of stuff. But regardless of all that is behavioral finance, is emotion management, is teaching you how to get to your goals.
Stay in the game.
Stay in the game. What are you actually saving for? What are you trying to do?
Right.
And just seeing you all the way through.
Right. I think last year is the best example of staying in the game. I remember last January, was all about recession. Yeah. The world's going to end. I don't know what's going to happen. We had one of the worst years that we came out of. Yep. And lo and behold, if you stay in the game and bought some good stuff, you've done really well last year.
And if you bought the Magnificent Seven, you did really well.
You did really well, right? So.
So it is important, again, and we're going to talk a little bit about tech and innovation, but it's just stay in the game. That's what matters.
So those are the things really I think are going to be big themes for us this year. Is really trying to get people to stay in the game despite all the, political stuff, of the geopolitical stuff, right? Like this great chart that I have in front of me that Alex will put up shows like all the shit that happened over the last 40, 50 years, right? And yet the market kind of really climbed that wall of worry as we say it here. So and maybe short term things will be volatile, but that's really the opportunity. So,
always think of them as opportunities. Yeah, even if they're multi-year opportunities.
Right. So speaking of that, we one of the things that we wanted to talk about this year is what things are we going to worry about, but also what are the things that we're excited about, right? I'm excited about the Vision Pro. Which you can order
at 5 a.m. today or tomorrow morning.
Yeah. We had Evan held the last couple months back on Future Money talking about spatial computing. It was a really awesome conversation. Check out that podcast if you get a chance. But the Vision Pro, I think it's the new paradigm in computing. And you can start ordering it tomorrow.
Let's see what happens.
For a small $3,500.
For a very small nominal fee.
From Apple.
But you could buy it on the Apple card and you get 3% back. So,
there you go.
So it's
I
really
can save $90.
It's a 70. It's 105. So it's really only 30. Well, then we have taxes. So basically, you save the taxes.
That's awesome.
So I'm excited about the Vision Pro. I don't know if it's going to be a monster hit to start. I do think people are going to need to get used to an idea of wearing a computer on your face.
I think that's the biggest misconception is people going to think, oh, this is going to be an iPhone and Apple's going to send millions. It's called the Vision Pro. It's really meant for a small subset of people who are mostly creatives, mostly technologists, right?
Yeah.
Who will start using this product, right? Not everyone can afford $3,500, right, for a fun device, right?
Yeah.
And Apple is going to figure out like what's the use cases, how do you adopt this?
Yeah.
You know, what are the best places? And Apple is not going to roll out a bunch of devices, but it's going to allow users to figure out how they can use the device to better their lives. And from there, hopefully, we have different iteration. And there's a lot of technology, there's a lot of R&D that's been into this device. So Apple is going to now start figuring out what features people are using, how to improve those features. You know, Apple, unlike everyone else, doesn't use these buzzwords, AI and VR and all these things, right? They're really methodical and strategic about how they roll out products, right? They do some things really good, put them in the market, and look at the Apple Watch.
Yeah.
All right? It's a $25 billion product.
It's crazy.
Look at the iPods. The
Wait,
AirPods.
what?
The AirPods.
I was like,
the AirPods.
look at the iPods. They're gone.
The AirPods.
I think there's one back here, isn't there? There's two back there, actually.
Oh, there is.
The original.
The precursor to the iPhone.
The original and the Nano.
Yeah. So I think it's really interesting to see what the reception is, what the reviews are.
Yeah.
The few people that tried it have had some really tremendous reviews. I personally can't wait to try it.
I really want to try it. I want to see how it is. I don't know if I'm buying the first ones, but I want it. But I honestly don't think I'm going to do enough with it to.
Well, GK is going to be buying one.
That's what we heard. So are you putting it on record here?
Putting it on record. Yeah. Ross Gerber.
Yeah, it's going to be good. And again, it'll be interesting to see how they incorporate all the, the tech they already have into the next topic that, we talk seemingly all the time about and everybody on earth talks about it, which is AI.
Yeah.
How does Apple use AI? I think the one thing I will say about Apple that all my devices are Apple. I love their stuff. I think they've fallen behind on the AI software stuff.
I'm going to disagree with you.
I mean, so tell me where it is.
They don't have a large language model. They don't have a ChatGPT-like device, but they have a lot of AI that is built into all the software that they build or their.
Well, if they have it, I don't feel it on any of my devices.
100%, but you don't.
Can you make Siri work? Like, just make Siri work. That's all I'm asking.
Spell check.
Spell check is fine. Actually, I like Apple's spell check better, although it's still terrible. But like, if you have a device now that can translate any language on the planet, like, why can't Siri answer the most seemingly obvious questions?
Yeah, I think there is a privacy issue there because you can't really train Siri on everything.
Sure.
I think that's really some of the things that Apple has really been very, very strong in.
Yeah.
But I think ultimately what you would see, Apple will have to get into the LLM game. We'll probably see some announcement from them this year. After the Vision Pro is out, maybe we'll see some kind of ChatGPT-like thing that Apple will have to release because they can't. Because be behind.
I think we talked today about this Samsung phone, right? That is Universal Translate, which is basically a Google product,
right?
Like, to me, again, your spatial computing. If you can converse with anyone on the planet through your headset, basically with a large language model that understands everything, that is predictive, that knows what you need and when, like that's the idea to me, and I hope they do. I feel like they obviously. I don't know. I'm not a I'm not a computer engineer. I'm not a programmer, but it feels to me that they have not gotten here yet. Even though they were kind of like the pioneers in the space with the Siri acquisition in 2011, 2010, 2011, whenever it was. They really kind of haven't moved that needle forward.
But listen, they've never been first movers.
Totally,
they don't do that. So I think that's. Maybe our surprise for this year is Apple's coming into the LLM play or the ChatGPT. And I think we're talking about this because this ChatGPT moment that happened in basically November of 2013 or 2013. That's way too long ago. 2022 is really kind of this AI unleashed to the world, basically, and this is really creating some massive disruptions going forward, and we're just starting to see this, right? So
I think we're going to share this chart here. to tell everybody what this chart is.
Yeah. Basically, this chart shows basically the iPhone adoption versus the AI or ChatGPT adoptions, and went from basically 0 to 5. This is the excitement index. So this is the wrong chart.
Sorry, that's the excitement one.
Yeah.
Which I think is funny because it also, go back to that real quick. It also makes people, like, you have to think about this stuff too.
Yeah.
Okay. Sometimes excitement leads to overexcitement, overhype.
Yeah.
And when you see a chart like this, you go, wow, it went from like a non-existent thing basically.
Yeah.
Just shot up to the sky.
We haven't seen a product that goes from 0 to 100 million users in 2 weeks,
Totally.
We haven't seen a product that is so useful to so many people at one time, So I think this is why it's such a powerful change is really because this thing has impacted our lives right away.
Yeah, it has, and it just continues. And there's still people who have no idea what it is. Yeah. Like that's the crazy part. Like
we're still living under a rock.
I'm telling you, we're biased because we're in this space. We know the space. We talk to a lot of tech entrepreneurs.
Right.
So we're biased in that sense. Most of general society is still not using LLMs.
Well, if they're not, it's definitely in something they're going to be using soon.
For sure.
So I think what you're seeing right now is like, this is the first excitement moment, and we'll talk a little bit about the adoption of innovation. But now what you're going to start seeing is that in product and things that you're using in any interactions you have with other with companies, with other products and so forth. So this is going to be incorporated in many things that we interact with on a daily basis, and it's already happening.
Yeah, there was one thing that showed, and I don't think we have this chart here now, but there was one that showed the online dating chart. And it's like the percentage of people, I think it's now over 50% of people meet online now.
We have one partner that got married this past weekend. I met on Hinge.
Yeah. My last girlfriend I met on Bumble. So, it's happening. But you're basing your interactions, your meetup with somebody based on like 5 things they write and a few pictures, right?
Sure.
And let's be honest, let's call it 75% the pictures and 25% what they write. If these LLMs, if these machine learning
can do a better job
of matching you with people who are much better, you can create these systems where hopefully you can create. Now, will it end up in a better actual partner in the end? I don't know, but I think there's, speaking from experience, that there's this fatigue of these dating apps, which are all the same, and they all kind of do this basic one thing. I think there's potential, like it's kind of like when a new technology comes out, we honestly have no idea where it's going to end up in 10 years.
We're still in like the awe moment right now.
Yeah.
I think the what we're going to be in 2 or 3 or 5 years is going to be nuts. It really is.
Yeah. So let's show the next chart here. Real quick.
Yeah. So speaking of winners and excitement, NVIDIA has been a really insane story last year.
Yeah.
I don't think we've seen a company raise guidance, revenues, profits. I think they raised their profits 6 or 7 times last year. Crushing it, like the most optimistic analysts. And they kept doing it quarter after quarter. And simply because there is so much demand for their chips, right? And they keep innovating. Like, people want the H100, they have the H200. So it's really an amazing story. And this is really simply telling you that this data center, it's going to be so much data, so much processing, compute power that's needed for these AI models to be run. And NVIDIA is going to be one of the most massive beneficiaries.
And they literally cannot keep up with demand. Like, that's the biggest problem, is just making enough chips.
100%. And you have to wait a year or 2 now to get the chips that you want, because Apple and Microsoft and Facebook or Meta are buying. They're buying all of them.
Amazon too.
Yeah.
So if you go to, I think slide 15 is the one I wanted to talk about.
Slide 15. And by the way, we want to credit this slide deck from Benedict Evans. One of the he's British, and he does a lot of great research in tech and innovation. It's someone I follow, so
yeah,
I want to credit him for some of his slides.
It's really good stuff. There's a lot of slides here, so we're just going to kind of show you guys some of the highlights. But I think this chart is a cool one, like to kind of just show the different iterations of computing over time and how AI is kind of just the next model, right? So for those, again, who are not watching on YouTube or whatever, right, we have the first computers, right? Those were the mainframes, the giant computers you see, you know, in the old days.
This is the 60s.
Yeah.
It's IBM.
The giant NASA computers and all that kind of stuff, right?
Yeah.
Then you have the PCs, right? The rise of the PC market. You know, probably the 90s, right? The most, you know, Windows 95 was probably the turning point there.
Totally, yeah.
And then the next one, you kind of have your web-based version,
internet,
right?
the
internet stuff, right? Before that, everything was local, everything was stored on your hard drive, and the internet becomes, you know, open source to everybody, right? And then we can say, right, everything's building on the last generation of things. Then we go mobile. Cloud, mobile and cloud.
Yeah, this is 2008.
Remember when you used to save things on your hard? Remember you had to buy like external hard drives because you had to save and all your pictures and all your this and that. Like if I lost my computer, I just go to the Apple store and I buy a new one.
Or my iPhone. When I lose my iPhone, or when I get a new iPhone, everything just goes back into my iPhone. It's amazing.
Totally. But I'm like, I literally would just pick up a computer from a store, turn it on, sign in,
and that's it. Yeah,
you're all ready to go again.
And I think what's important to see, and why we're talking about these things, these are usually 10 to 15 year trends, right? They're long-term trends, and the generative AI is the new one that is kind of just started. So we're really in the early stages of this kind of, and that's why everyone is excited, right? So earlier on, the biggest winners are the people that kind of have the infrastructure layer. So right now is NVIDIA who's building the chips, but also Microsoft and Google and really people that have the data. But after that, there's going to be a lot of applications built.
Yeah, we have no idea.
I don't know who the next Netflix is going to be.
Correct.
You know? So
once again, when the government, you know, built GPS, you know, back in the 60s or whatever it was, did they think they were going to use it for dating apps and Uber?
For Uber, that's great, right? So, and this is what people don't know is GPS was built by DARPA, by the government in the early 60s, 70s, and they put it out there to the world to use, which is amazing. And this is why, you know, we want to do research in these things. So that's really why it's exciting for us, because these large trends, when they happen, they create a ton of efficiencies, which means increases productivity, which means creates a lot of wealth.
Correct.
Right? And that's happening in the United States. You know, so most of the AI companies that are successful are actually in San Francisco, in Los Angeles, in California in general. So a lot of this really amazing stuff is happening around us, and it's just the beginning.
Totally. And then we talk about, right, like this is, you might have heard the phrase the S curve.
Sure.
You know, S curve is a term used from, you know, stats and mathematics, basically to define the way the curve shows. So again, we'll show you this for those of you who aren't watching. You get this initial kind of ramp up where people start to get excited about something. And then you get this big leg up over, you know, and you can look at all tech trends from the past, whether it was cloud, whether it was like, you know, mobile phones or the internet. You have this huge jump up. And then after the adoption becomes so ubiquitous, then you kind of have this tail off, and the curve sort of looks like a slanted S almost. And so, you know, the question is where each of these technologies are in the circle. In this cycle, right? So if you look at mobile phones, for example, right? The mobile phone thing is kind of at the top end of the S curve. It's boring. I
mean, we've all had mobile phones for a long time now, right?
Exactly. You know, if I hear one more Apple's phone is made of titanium commercial, like I'm just like, is that what you got?
How about that phone that fell from an airplane and survived?
You know, they should put that in the advertisement. I hope it was the titanium one, because they really have been pushing that one a lot.
Totally.
Right?
Machine learning. Like we've heard about this a lot. We don't know how it works, but it's important. You know.
So it's like that, right? We're on the high end of the S curve here. Like we're coming up, and then you know, this large language, the language models, the generative AI. We're just starting, right? So if you follow trends technologies that are really transformative. And we're not talking, right, there's all these technologies that came along with that may or may not be transformative. We don't know.
Right.
I think it's clear based on everybody's discussion that that AI, generative AI is a huge trend.
Yeah. And we anecdotally we have started using ChatGPT to actually look at like how to interact with financial advisors and stuff, and there's some really cool stuff that is happening where these things are actually providing some really great answers that just augmenting the relationship they can have with investments, advisors, and so forth. So really, there's a lot to see that's going to be built over the next few months. I thought what's going to happen in 3 years is actually happening right now.
Yeah, and that's the thing about all tech, right? It's tech is faster, and this is what scares everybody, right?
Right.
Is
change.
It's not just change. It's every technology iteration that happens. When you talked about the 10 to 15 year trends, if you look at the sort of like trends of each market, they're getting shorter and shorter. The curves, the adoption is getting shorter, right? Mainframes were like 20, 30 years.
Sure.
Right? Yeah. Then you have PCs, right? You're probably talking 10, they're probably talking 20 years. Right? If you're really looking over the course of that. The internet, 15, mobile phones, probably 5 to 10, cloud computing 5, and now it's like, and now we're here. So it's all the adoption of technology. Every stage up is always a faster stage.
Yep.
Right. So the fear is that we're gonna create a monster here.
Yeah.
That the genie's gonna be out of the bottle and we're not gonna be able to control
the genie
it.
is out of the bottle.
Right. But the question is right, with all technologies, there's risk, and the grander the technology, the greater the risk. Right. If we start to have systems that think for us, that right now
makes us dumber.
Not just makes us dumber, but like let's look 5 years out in the future.
Yeah.
And now everything's based on large language models, and everything we do. You don't know the data source that you're dealing with. You don't know where it's pulling information from. You don't know who is basing this on what. You don't know how these machines are going to start to adopt.
Listen, we can go into rabbit hole about
if we want to do another episode on the AI
and what we're not excited
future.
about.
No, I think it would be fun actually to do a dystopian future AI.
There's enough shows on Netflix about that
exactly.
shit. Okay.
Just see, actually Apple of all the companies. Maybe that's why they don't do AI large language models. But there are, like everything, there's always a there's always a risk. There was risks with when the internet came out, people were nervous and all that kind of stuff. So we just have to be smart about it, and hopefully people are using it for the better. But the trend is there. It is absolutely the most exciting. I would probably say we've been in this for a while. I think this is the most exciting trend, at least since the launch of the iPhone.
Yep.
And possibly since the launch of the internet.
I just watched the BlackBerry movie. And there is a scene when the iPhone gets launched and the guys at BlackBerry are like, oh no, this is nothing.
This is nothing. Who's gonna want a screen that you have to type on? There's no keyboard.
100%.
Yeah.
So anyhow, we'll close it up here. Thank you again for listening. Thank you for sending us questions, comments. Excited for 2024. We have a plan to bring some nice guests to keep talking about what's happening, and thank you for listening.
Cheers.
Happy New Year.